Hi everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Monday the 14th of February. Now we've had a significant move on major markets since Friday. The sentiment had been certainly worried about the number of rate hikes we've been factoring in from the Federal Reserve, but there was an escalation in the tensions on geopolitical front between Russia and the allies in the Eastern European border of Ukraine, and the prospect of conflict is elevating significantly, and what we are seeing is a significant move into safe haven asset plays. We've seen gold spiking high, we've seen treasury yields actually pulling sharply lower on the 10-year at least, and we've seen also equity markets falling sharply in the wake of that. There's still a degree of the reaction coming through today, although there's a slight kickback against that gold strength today, but US futures are a little bit flat, and European markets are playing catch up at the moment. So how that geopolitical outlook progresses in the coming days will be certainly very important for major markets, I think. Now, what we have today is a very light economic calendar, nothing really until much later in the session with the Japanese GDP data. So markets will be looking at also for comments from Fed's James Bullard, who has been the most hawkish of the Fed members, and he's created volatility in recent weeks. And certainly those comments that he comes out with today will be important again. Now, the charts we're looking out for. Well, we've got euro-dollar. The reaction on euro-dollar has been lower. We've got the dollar strengthening, so euro-dollar has pulled lower on the back of that. Does that continue now? Also looking out for the gold chart. Spike higher on gold, but can it continue to move higher? And also the SP 500 futures. Consolidating this morning, but a key downside break on Friday. So let's have a look at these charts. And onto the Infinox MT5 platform, just starting off with euro-dollar, we can see that the consolidation that we've had following on from the sharp ECB move to the upside on that euro a couple of weeks ago, we've seen the consolidation and then now broken to the downside. And I've been talking about 113.60 to 113.85 as a basis of support. That's been decisively now broken. It takes you right back into what essentially is the middle of this trading range that we've got. It was looking positive for a while for a potential test of that resistance, but it now has turned lower again, and it's just continuation of this range now. You can see the moving averages, 21 and 55-day moving averages, sort of flattening off again, and you've got the momentum back at 50, pretty much entirely neutral once more on this euro-dollar chart, and you're now going to be factoring in 1360 to 1385 as a basis of resistance on the upside. So we've got to put on the 4-hour chart. We can see that resistance overhead there now, and the reaction that market gives to that, I think, is obviously going to be important in the next day or so. You've got the support the next on the downside of 1270. In fact, it's around about 13 figure to 1270 are the key levels to, I think, really watch for. And if that gets broken 1270, you really are back towards the lows again. But I think essentially it's mid-range. I think it's what I'd be looking out for is a basis of support potentially coming in now. But essentially there is still mid-range and neutral for now. So we've got this upside break on gold, and the question is, how do you play it? Well, I think that essentially gold is still in a difficult situation to really sustain moves higher. This is obviously war premium that it's had on the gold price on Friday. Prospect of war, people move into gold, traders move into gold, but how does this continue? Well, already we're starting to see the market pulling back slightly. On a technical basis, you'd say it's a pretty strong move, but I'd still be concerned about how often these moves just sharply unwind, and if there is any sort of scaling back of the war talk from Russia and the US, then you're likely to see gold spiking back lower again. So it's a difficult one to really suggest that it's going much higher from here. The longer this war talk does continue, it does suggest that there's going to be further upside potential, but I think, again, this is definitely down to geopolitics at the moment, this move. And I wouldn't be surprised if it's sort of unwinds quite quickly if that situation tails off. And finally, S&P futures. Well, what we've seen is this sort of failure at the resistance, 45.85. Now we've seen the break to the downside, 44.38. So it really does show that we could be coming back quite considerably once more. You sort of take the measured target 45.85, measure that down from 48.30, and you sort of give 150 pips of downside. You're sort of back around this sort of 42.90 area. which could easily be seen now, and they are sort of the reaction lows of back where we were. So the reaction around this old support 44.38 to 44.54, you can see that on the 4-hour chart. This is now a pivot area of resistance overhead, and again, how the market responds to that is going to be important. A break back to the upside quite quickly. Again, if the market, if the geopolitical tensions die down a bit, then we could see back higher once more, because obviously this was a sharp move to the downside on Friday, breaking that support. But again, if the situation improves, then you could see that back higher. Thank you for watching, everyone. I hope you found that informative for your trading. I'll be back on Wednesday. We'll be looking at how this Russian conflict is progressing and also looking ahead to the US retail sales. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Good luck in your trading, everyone.